This is Alan Bush with the Daily Financial Forecast for Thursday, November 8th. Stock index futures soaring yesterday, putting in the best post-term midterm election rally since 1982. Bit of a profit-taking move today as futures a little bit lower, but I would not be surprised to see a move back to higher on the day. Also, there is a very strong seasonal tendency, or a better term might be historical tendency, for stock index futures at this juncture in a presidential term to continue to advance after the midterms and also in the following year. The third year of a presidential term is historically the best year to the upside in stock index futures. So I think this time will be no exception. Higher prices appear to be likely for the stock index futures, and I do believe that within the next the first half of next year, maybe even in the first quarter of next year, we can see some new historical highs in all of the major stock index futures. Moving over to the currencies, the euro currency under some pressure. A lot of this is due to political problems. The Eurozone still wrangling with the problems with Italy's budget. Italy is intent on expanding their budget deficit. The European Union seems to object quite a bit to that. Also, we have the British pound holding up relatively well. Still some optimism that there will be some type of Brexit agreement. Interest rate markets trading narrowly mixed. Still looks like the Fed today at their meeting will not change policies. In fact, there's only a 7% probability of a rate hike at today's meeting. However, there still is a very strong likelihood, very strong possibility that the Fed will raise at the December 19th meeting by 25 basis points. And I am on board with this. Quite often, I like to be against the crowd, but this is not one of those times. So I am still looking for a rate hike in December, not today. However, one time that I am not with the consensus view is for the Fed outlook next year. Most analysts looking for 3 rate hikes, maybe 4. We had one East Coast bank at 5, which I think is rather outlandish to say 5 rate hikes. I'm still going with no more than 2, as the global economy seems to be cooling a little bit, and the Fed cannot raise rates in a vacuum, so to speak, with central banks elsewhere in the world not hiking aggressively or keeping their accommodation. So looking for only 2 more rate increases from the Fed next year. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.